Hello and welcome to another trading day right here in Lagos, Nigeria. Welcome to the show. Here's what's coming up in 55 minutes. The Lagos Chamber of Commerce and Industry gives its economic outlook for the year 2024. And the NGX rally intensifies, hitting another high at intraday. Saudi Arabia has cut its hiring fees for Kenya domestic workers by 80,000 Kenyan shillings. Great to have you join us. I'm Ladi Williams. Let's get the top stories that set your agenda now. We see a royal court in Jersey, the United States, has ruled in favor of the repatriation of stolen assets worth about $8.9 million to Nigeria. The forfeiture notice to the court was initiated by Jersey's Attorney General, Mark Temple, who told the court that part of the funds was allegedly shared with top politicians in Nigeria ahead of the 2015 general elections. According to the U.S. court ruling, the funds or assets which were allegedly diverted under the pretext of purchasing arms to combat Boko Haram terrorist group were deposited in a Jersey bank account. The court found out that the money was likely stolen by Nigerian government officials and not used for the intended arms purchase. And Fitch Ratings has assigned an A rating, watch negative, to Union Bank of Nigeria's PLC's issuer default ratings, viability and national ratings. The action follows the Central Bank of Nigeria's sacking of the board and management of Union Bank and two other deposit money banks last week due to regulatory non-compliance and corporate governance failure. The RWN indicates the uncertainty surrounding the reasons for the CBN's intervention, potential further regulatory actions, and the negative impact on UBN's standalone credit profile. Let's get a quick check now on oil market. We see oil prices fell today as a stronger U.S. dollar limited demand for a greenback-dominant crude. Though the rising risk of supply disruptions amid the intensifying conflict in the Red Sea, that curbed some of the losses. Global benchmark Brent crude futures fell about 36 cents to $77.93 a barrel, while the U.S. WTI crude futures fell about 43 cents to 0.59% to $71.97 a barrel. Brent crude rose slightly yesterday, while WTI fell as investors saw fundamental weakening in the U.S., but the ongoing naval and air conflicts in the Red Sea increased concerns of tankers having to reroute to avoid the area, increasing costs and the amount of time for deliveries. And Lagos Chamber of Commerce and Industry has given its economic impression for the year 2024. Economists and government representatives who were at the event in Lagos, southwest Nigeria, spoke on various aspects, including inflation, budget, the removal of fuel subsidies, among others. Take a listen.
Right. So
the 2024 Economic Outlook and Budget Analysis of the Lagos Chamber of Commerce and Industry is a gathering of economists, members of the chamber, as well as government representatives.
Thank you so much.
It's an opportunity to assess budget performance, the true state of the economy, and the backdrop of government policies. Apart from the budget, macroeconomic indices come into focus. For instance, while Nigeria doubles with double-digit inflation, which hit a 27-year high at 28.92% for December 2023, there are still questions as to how realistic this number is, and if it does not capture the true state of prices, then its usage may lead to wrong decisions.
The last time we reviewed the inflation basket, which we are supposed to do every 5 years, was 2009, because your consumption pattern in 2009 was totally different from what it is today.
The keynote speaker, Mr. Ruwani, has set the tone for the panel, which is made up of the chairman of the Presidential Committee on Fiscal Policy and Tax Reforms, Taiwo Oyedele, the Director General Budget Office of the Federation, Ben Akabueze, and moderated by Chinyere Nwekewe.
Yes.
Mr. Oyedele shares a shade of light in the area of inflation as well as debt servicing, which should spill to other parts of the economy.
Even though it's still rising, it's rising at a slower pace. So and what that means to me is we're getting towards the end of it. And of course, like economists will say, also the base effect, which means in 2024, it will not get worse, it would get better. Debt service as a ratio of revenue is declining, was about 96% in 2022. It will be much less in 2023 and going forward to 24 and thereafter.
For Mr. Kabweze, unexpectedly, he begins with the budget, which has been on deficit for the past 2 decades.
In a situation like this, a lot of people think, oh, why don't you cut expenditure? That's not a feasible option that we have currently. And in the first place, we're not even spending enough.
Another area which the panel has drawn attention to is the need to rebase the GDP so as to update the status of the country among its peers.
The press is here. Don't go and do another headline tomorrow, because I remember, just talking about some of the things.
It's all about outlooks right here in the first month of 2024. Everyone's trying to find out what's going to happen in 2024, looking at the Nigerian economy and Africa at large. And we know STARS, a premium provider of economic analysis and data-driven insights, they presented their outlook and what their crystal ball is telling them for Africa and Nigeria, talking about the economy. Joining me now is Bolatito Bickerstaff, financial analyst at STARS. Great to have you on the show.
Thank you.
Fantastic. So, talk to us about the key findings in the 2024 outlook for Sub-Saharan Africa.
All right, thank you. As you rightly mentioned, 2024 outlook covers different sectors, banking, oil and gas, and economies included. But for this conversation, we focused on what we found or what we are projecting for Sub-Saharan Africa as a whole. So the IMF has projected that Sub-Saharan Africa GDP growth will be 4% in 2024, which is the second largest growth in the world, following Asia's 4.8. Because Africa is not monolithic, we looked just dive deeper into those numbers to see what countries will be driving that growth specifically. So it was interesting to see that most of the growth is going to be coming from the East African region, with countries like Rwanda, Tanzania, and Kenya. And that thing that was interesting to see was that countries like Mozambique, Cote d'Ivoire, and DRC would also keep driving growth, which they've done for the last 5 years. They've outperformed the GDP growth in Sub-Saharan Africa. The very interesting thing is also that the large economies in Africa, like Nigeria, South Africa, and Egypt, would actually underperform. And this is because of the policies and macroeconomic situations that they have in 2023, which will spill over into 2024. So that's the general overview of the outlook for Sub-Saharan Africa. Thank you.
And looking at, Sub-Saharan Africa, what country, has more prospects to, attract investment in 2024?
All right, thank you. As I mentioned earlier, the major bright spots are in the East African region. So we see countries like Rwanda, Kenya, and Tanzania, which are moving towards tourism. They've intensified efforts. The governments in those regions have intensified efforts for tourism. So, for instance, Rwanda and Kenya actually announced last year that they were going to be visa-free countries. Another country or other countries that would likely really attract investment is Cote d'Ivoire as well. So they are intensifying efforts in agriculture and specifically their cocoa processing. They currently supply about 50% of the world global cocoa processing, and we think that that would also attract investors. Something that is interesting about Cote d'Ivoire as well is that they're also trying to improve their business environment, and we can see that from the fact that they are currently hosting the 2023 Africa Cup of Nations. So our bets are on the East African countries, Rwanda, Tanzania, and Kenya, and also Central Africa, specifically Cote d'Ivoire, Mozambique, and the DRC.
All right, definitely. Investors, they must be looking at some sectors, at this point, those trying to come into Sub-Saharan Africa. What key sectors do you think is will get the attention in 2024?
Right. Again, it really depends on the country you're going for. If you're, for instance, as an investor, are going to go to East African region like Kenya, the likely sector will be tourism and agriculture. So, case in point, last year, the Kenyan government started this privatization drive. They're trying to privatize about 11 sectors, which includes the tourism sector as well, and which we've seen, which is evidence from the fact that they have now made Kenya visa-free. Another sector, if you were to go to the Cote d'Ivoire instead, and the sector that you'd be very interested in again is agriculture as well, because the government has also continued to try to improve its agricultural sector. So whatever sector you would be interested in as an investor would actually depend on the country that you are investing in, because all of these countries are focusing on different sectors that would actually drive growth in their country.
And definitely, looking at other climes, we see it's mostly about that's developed economies. We're seeing their, inflation rates, declining, almost, getting close to their target levels. But right here, it's not the same picture. For 2024, we're already hearing chatter about rate cuts, in developed climes. When are you seeing or expecting rate cuts in most parts of Africa?
Okay, so Africa is a little bit different because our inflation is majorly driven by exchange rate and fuel prices. But with advanced economies, reducing their rates, we're going to see that would impact our exchange rate depreciation in the African countries, because what that means is that investors will start to, deviate from those countries and come to save them to African countries, which are still keeping their rates high, right? So then the exchange rate will start to, depreciate at a slower rate. But we don't see Africa or countries in Africa cutting their rates until H2 2024, when inflation starts to cool. And we think inflation is going to start to cool by then because of the base rate effect. Last year in June, inflation rates in most African countries really went up, mostly because of fuel prices. Bringing it back home to Nigeria, our exchange rate soared by 613 basis points between May and December to hit 28.92%, largely because of the FX reform that we undertook between in June, and then the removal of the foreign subsidy in May and June as well. But we are hopeful, or we see that for our first half of the year, most central banks in Africa would keep increasing rates to tighten monetary policy, but from H2, they are going to start easing just so that they can also promote growth in the economy as well.
And what are you seeing for most of the major African currencies in 2024?
Yes, again, because of the rate decreases that are bound to happen in most advanced economies, what that means is that investors would want to actually put their money in countries that are still keeping their interest rates high. So what that would mean is that we are likely, in Africa, we're likely to get more foreign investors, which will sort of stabilize our exchange rates, which have depreciated. So for instance, Nigeria's Naira lost about 50% in 2023, but with the influx or prospective influx of foreign investors coming back as advanced economies start to cut their rates, we expect that the exchange rate will start to depreciate at a slower rate, and hopefully it would regularize when we are able to keep these foreign investors in the continent.
Right, and still looking at Nigeria at this point, bringing it home, the macro issues are still there, but now there's also this disturbing trend, with the rate of kidnappings rising, and also coming into city centers like, Abuja and Lagos. How are you seeing this impacting Nigeria's growth prospect? Because at the end of the day, you can't do business, where you don't feel safe.
Exactly. So currently, food inflation actually feeds about 40% into Nigeria's inflation, and that is being driven by insecurity. So we can already see that insecurity is largely impacting Nigeria's growth rate. So with this current trend and spate of kidnapping in Lagos and Abuja, specifically Abuja, which is also somewhere that people would pass when they are, bringing food to other parts of the country, we really are very worried about this spate of kidnappings because it is likely to actually scare foreign investors away. Again, Nigeria is in dire need of FX supply. And this type of climate where you are not sure what will happen when you come, and just the insecurity levels is likely to actually scare these investors away. So that would negatively impact Nigeria's growth rate if something is not done quick.
So definitely a lot to unpack there, and everyone's hoping, that there's some kind of, soft landing, in the African region. But from your standpoint, what kind of landing are you seeing? Is it a no landing situation, soft landing, or hard landing for the sub-Saharan Africa region?
So we're actually we're seeing that there are going to be different sort of landings. Some people would have soft landings, and some people have mild landing. Countries like Kenya, for instance, are already showing that their inflation rate is already decreasing and tilting and converging towards their target. And we have countries like us, Nigeria, where we are projecting at stairs that by May this year, our inflation rate will get to 31.14%, but start to decrease to get to 30.89%. So again, because Africa is not just in one direction, every country has their own peculiarities. We do not think that everybody is going to go in the same direction. Different countries are going to have their own different landings, and depending on what is driving the economy.
All right, thank you so much. It was great having your perspective, Bola Tito Bickersteth, the financial analyst at Stairs. Thank you.
Thank you.
All right, we'll take a break now. When we come back, we head straight to the markets. The NGX, again, a new high today at intraday. That's coming up. Just stay with us. Welcome back. Let's get to the markets. Now we have Willie Bong with the details. Great to have you, Will. I'm sure you saw those POS charges, at this point. They're really high.
They're really high. I'm sure really somebody's making money somewhere. And it's probably, bouncing up to the equities market,
And
Someone's investing that money somewhere.
The annoying part is when you get to the bank and you're trying to, go use an ATM. And the next thing, the security man's like, are you doing transfer or this? I'm like, no, I want to use it. He said, no, it's not, no money there.
No money.
That's always what I get.
And then you wonder that you say about over 90% of the money is outside the banks. So why is there scarcity of this currency? Why do we have to buy our own naira? It begins to look like we're buying the naira in our own country.
Yeah, we can't have that.
We can't have that. No. So the authorities have to look into it. The issues are already a lot.
We can't.
Yes. We can't deal with this.
Cash is another issue.
We don't need a lot of cash. We just need cash to run around, so make it available.
Cash, yeah.
So we're just going to kick off with the markets. We're checking in, as always, major equities in Africa, where sentiments were mostly positive at intraday. We see Nigeria's NGX all-share index coming up with another new high, surpassing 89,000 points. Any moment now, probably nearing 90,000. Let's not it's not far-fetched. 90,000 is right around the corner now with the rate at which the NGX is really going. South Africa's JSE on the flip side traded down at intraday 1.32%, down to the 72,000 points. Now let's look north and see how that traded. In EGX 30 at intraday was up 0.3%, is still on that bullish run, 27,000 points now. Any moment now is trying to catch up with the NGX. Kenya, however, closed yesterday's session, that's Tuesday, in the red. Now let's get a deeper sense of what's happening at the NGX at intraday with Ambrose Omodion, Chief Research Officer, Invest Data Consulting, why the NGX is at this, having this frenzy, why the investors are trying to, make sure stocks don't even remain on board. Good afternoon, Ambrose. It's good to have you on the program. Ambrose, the NGX All-Share Index has crossed 89,000 points and is nearing 90,000 anytime now. This is definitely history at the NGX in a space of 11 trading sessions, maybe more. But this year, we've seen this happening. Can you just tell us what's happening, Ambrose?
Yeah, actually, I would say that the investors in the market are already bullish. But one thing is very, very important that we saw the rally coming from 2023, where the market get about almost 45.9% to close the year. That trend, extended into 2024. And also, seeing that the inflation figure that was released recently, to the market shows that most of the other investment windows are still returning below, the inflation figure. That means their real return is in red. That also trigger more, buying interest, in equity. Knowing that the earnings season is around the corner, then you can make, above what inflation is doing in less than, 6 months or less than 6 weeks. That's also the attraction in the market, as to speak. But I will also advise that investors not be carried away with this, uptrend or this orbit, because anywhere in the world, market will not remain in up direction. That means opportunity for those that are designing to take profit in the market now. As you just mentioned, market across 90,000 mark today. For me, it's a good sign that market is still very strong. For investors, do not have to cash out their profit, either slowly or the percent that you want to do. Because if you are trading your plan will tell you what to do at the right time. Because you have your buy range, your stop loss, and your profit target. Don't allow the market to carry you up and break you down. That means you are just following the bandwagon in the market. You must invest intelligently with what? With strategy. For me, any season is going to create wealth for investors. But don't forget that the trend we are seeing across the globe is signaling that the market might likely change any moment from now. If you are seeing that the geopolitical tension around the world has also triggered some of a return of inflation in a mature economy, that will soon, in later distance, start reflecting in also emerging market. That means investors in our market now that anything around corner, know what to play at right time, because those blue chip companies, the price they are selling with the earnings that are coming to the market to support that price. Today, one of the companies that started kick off the market earnings for Nigeria is Infinity Trust Mortgage Bank. The number came very impressive. But if you look at the earning per share for the full year 2023, a 7 naira stock, giving you a full year earning per share of 23 kobo. Fine. It keeps that they've done well from 14 kobo to 20 kobo. But will that support the 7 naira? This is what investors should be looking at. Because to expect more results between now and 31st of January, they will give us more insight what to do between February and end of 31st of March. For me, investors should trade with caution at this point. Yes, it's good that market is very upbeat at this time, but don't be carried away with that up market.
We'll definitely, investors, I'm sure, will try not to be carried away and know when to take profit. But we're talking about the stocks that are actually driving this the movement right now. We know that the banking stocks did their thing about last week, but we've seen conglomerates now bringing their A game. So what is happening with the conglomerates? Are you saying that all sectors are not pulling in their weight to drive the market up?
Yeah, for me, like what you just said, the consumer goods or the manufacturing sector is surfacing with a uptrend now. For me, investors should think with caution in that regard, because nothing has changed in terms of effort that put most of this company in loss position in their Q2 and their Q3, and we're still having that same FS problem, unless we're telling that the stock has been on that value as speak. But if there's no number for it to relate to where they are going, unless tomorrow we'll not see that inflation start coming down, Nigeria purchasing power change. But if the same sector you are producing what is on the shelf, I don't expect them to put a number that will be very fantastic. That's why I say you have to treat this market with caution. It's good that, as you can see, the life of even the Nigerian breed that are posted indicates all of them are in green, which is good. But for those that are in what we call industrial goods, the cement industry, the life of Boa, the life of Dangote and the Wapu, yes, we can see that yes, because we're entering a new year. The government also wants to drive the infrastructure. But for those manufacturing setup, you have to trade with caution because cost of production is high because of what they import their raw material. Exchange rate is high. For me, and also people consumption also start drinking already before now. That means if you are consuming, let's say, for say 2 tins of milk, now you are reduced to 1. That means most of them will remain on the shelf for these companies. For me, this number we're seeing will not support the price of this manufacturing. So that you don't expect a good dividend to support the price, especially for that sector, because their numbers are not looking up the way from your Q1, from their Q2 and Q3. I'm not sure overnight in Q4 because of festive season to change their numbers. No, because we have seen that they have been red for 2 quarters. For me, trade caution with all those counters.
Okay, so earnings season is right around the corner. You said the Infinity Trust Merchant Mortgage Bank is already dropping its impressive results. What is your outlook for other expectations for other companies that were going to release their results?
Yeah, for me, this financial company, a mortgage company, that means this is a signal that all those banking stock were expecting, insurance company, also they see a better number from there. But the price and their earnings determine what to come to investor. We have seen obvious from this one that no matter what they're going to pay, we'll support the price. But for those banks that have done well, insurance that are priced are relatively low, and also if their number come and beat expectation, those ones we can still further go up. But for now, trade this market with caution. That's what I would say for every investor in the market, both the traders, trade with caution, and also know when to take your profit because market will not send the day it's going to come the other way. That means as a trader, as you're trading your plan, you know when to take your profit. But if you fail to take your profit, market will take it back from you.
Ambrose, you've just been throwing caution. So investors that's the watchword and very key word here. The market is like a bubble right now and can burst anytime soon, any moment from now. So investors really need to know when to take profit. Like you say, trade, know your plan. I mean, trade your plan, know your plan, trade your plan, that's it. And just make sure that you stick to it and make profits when you need to. So what do we see? Definitely the market is going to close in the green. So what do we expect? Do we see more stocks crossing to the 1 trillion naira market capitalization?
It's possible, but one thing that will send you a signal this afternoon is that look at the numbers of stocks that are in red compared to the last 2 trading days. I've seen that today we saw about more than 20 to 22 stocks in red compared to other days we are seeing just only 4, 5, 9 stocks in the user chart. Tell you that people are really taking. That means banking stocks today, you can see that most of them have slowed down in that rally. For me, investors will just stay patient. But for those that are yet to move, yes, they might go up because of we expect their number to fall. At this point that the market is, yes, it's good that other investment windows are looking down in terms of below inflation. Equity market is ahead of inflation. We agree because year to date, we're already seeing about 17% return or even 20% return with what we are seeing today. That tells you that there's still potential in that market. But in all this, trade with caution, that is what I'm saying. Not that the equity market is good no area at this time. Because the peak where it is now, all the indicators are that the market is at overbought region. And when market is at overbought region, the next thing you see is correction. But if market is at oversold region, next thing that you see that market start going up. Now that it has gone to this level of overbought region, the next thing you see that market will correct. It might not be as bad as what we saw in 2008 because the fundamental and the scenario are different, but market must correct.
Definitely, market is overbought, needs to correct. Thank you so much, Ambrose. It's always good to have your perspective.
Thank you.
Look at other markets, especially major equities in the Middle East, where they traded mostly negative at intraday. We see Abu Dhabi is down 0.22%. We see Dubai also trading down 0.2%. It seems that it's a bit of red for that region, but let's see which stock exchange gained in that region. See Saudi up 0.07%, the lone gainer in that region, and Qatari index is down 0.92% at intraday. Let's see in the US. We're seeing stock futures were lower in pre-market trading, extending losing session to kick off the holiday shortened trading week. Futures tied to the Dow Jones Industrial Average dropped 0.62%, S&P 500 0.37%, and NASDAQ 0.19%. Of each of them, we're seeing they were dropping. The steam from the fourth quarter earnings result is not able to hold investors' interest for these markets, and that's why we're seeing that drop in that segment. So we'll continue to probably see more dips for the U.S. markets, pending what decision the Fed takes, either to hold rates or to hike rates. Investors are already looking through results from major banks, including Goldman Sachs, Morgan Stanley, and the Bank of America, and we're seeing that some impressive results coming out there. But let's check out yesterday's close with our correspondent Maria Bird.
The U.S. stock market had a tough day on Tuesday, as the Dow Jones was down at 0.62%, the S&P 500 down at 0.37%, and the heavy tech Nasdaq down at 0.19%. The Dow Jones took a major day hit as Boeing took a 7.9% fall. This is causing many investors to be concerned about the stock market for the next few days. This 4-day week may be one that's troubling for many, as it's also clear that many investors are watching to see how the retails will close on Wednesday. This could mean some upward swing for the economy, or it could be a long story for the U.S. stock market in the days and weeks ahead.
Thanks, Maria. Now let's look at Asia's market. Let's see how they perform. I can tell you for now that it was red for that region. Japan's Nikkei 225 extended losses for a second straight day after touching 33-year highs on Monday, with the index slipping 0.4% to 35,477 points. Now, news coming out from there says China AMC Fund Management will reportedly and temporarily suspend the Nikkei 225 ETF fund trading on Wednesday due to high premiums. Now, South Korea's Kospi was also down 2.47% and to end at 2,435 points. It's the lowest since November the 14th, while the small cap Kosdaq dropped 2.25%. Hong Kong's Hang Seng Index plunged nearly 4% there, and this is the lowest level for the HSI in 11 weeks, while the mainland Chinese Shanghai Index, if you see that very quickly, also fell 2.09% after China's disappointing fourth quarter GDP report. Now, according to China's National Bureau of Statistics, the country's economy grew by 5.2% in the fourth quarter of last year, missing economists' expectations of a 5.3% growth forecast. Now, China is still contending with major challenges from deflation pressures and the property crisis as the year kicks off, and with investors overwhelmed so far by policies to keep economic momentum going. Now, in Australia, we see the S&P ASX 200 down 0.29%, falling for a fourth day. And now we also see the Shanghai Composite, as I mentioned, down to 2.09%. Now, see the markets really down for Asia. We hope that there's a rebound in tomorrow's trading session. But Ladi, I don't know if the other regions, other parts like Germany has got better news for us.
Yeah, so we'll definitely be looking out for these markets, because at the end of the day, we're seeing the GXs. That's talking about the NGX and the EGX, the EGX in Egypt, doing really well. You know, the first trading weeks of 2024. So it's looking quite good for them. But let's see, you know, if Asia can, you know, keep up.
Especially with
markets.
Inflation, you know, rising in the UK unexpectedly. We see if other markets outside the country or outside this continent are able to, you know, keep up.
Yeah, definitely watching out for reactions. Thank you so much, Will, giving us the details there from major markets, BTRAC, and the NGX. So right there, it's still day 3 at Davos, and we have Juliana right there bringing us details, and we're also having conversations coming out of there. One is from the Minister of State for Petroleum Resources, Gas, Ekpo, and he's talking about what they aim to get, you know, when it comes to of petroleum, what they want to get from Davos, you know, at this point in terms of investments, you know, coming into Nigeria. So Juliana had a chat with him earlier. Do take a listen.
It's one of the founding members of OPEC, and we play a very strategic role as far as, you know, energy security, you know, oil and gas production, you know, in the world is concerned. And, you know, we came here basically today to tell the world that Nigeria, you know, with a new government, is open to businesses. We're trying to ensure that, you know, we remove all the bottlenecks that have been an impediment, you know, to investment. And, you know, because the whole world is trying to go green, you know, the whole world is talking about, you know, cleaner and greener energy. Nigeria, you know, is more of a gas country than, you know, a crude oil country. We have over 210 trillion cubic feet of gas. And we have potential to get a lot more, because, I mean, the last time, you know, we did any real serious seismic, you know, investment was several decades ago. So we believe that we have a lot more gas deposits. So we see ourselves as more of a gas country than, you know, a fossil fuel, you know, production country.
Yeah, so we're still expecting more conversations right there from Davos. But let's head on to Germany now. See, Germany, they're known for one industry in particular, and that's cars. But in recent years, some of the country's world-famous brands have been stiff. They've had stiff competition and lost some market share there. Now, Volkswagen is trying to find a way back to the top. See, Lars Holter is there with the details. Great to have you, Lars. So what exactly is happening at Volkswagen?
Thanks for having me, Ladi. What was happening is not actually happening at Volkswagen, but the German automaker is apparently in talks with French firm Blue Solutions. That is a battery technology expert that, among other things, produces solid-state batteries for Daimler electric buses. And Volkswagen is trying to work out a deal that would have Blue Solutions adapt the design for cars. Maybe that needs a little background here. Solid-state batteries are what many experts call the holy grail of EV batteries, promising longer driving ranges and shorter charging times than traditional lithium-ion packs. And that is key for the industry, because cars have been good enough for a long time now. Engines for electric vehicles are working just fine. Batteries are the biggest challenge at this point. How to make them small and light enough for a car and yet have them power the car strongly and recharge quickly. Now, the technology has been worked on for a while, and it's complicated. Many startups have failed. Investors have got burned to a point where bringing in fresh money has now become difficult. Actually, last year, $146 million were invested in such projects worldwide, and that is down more than 70% from the year before. But no one is giving up. As a matter of fact, Blue Solutions says it's currently working on a passenger car battery with a charging time of 20 minutes, and they're aiming to construct a gigafactory for it by 2029.
Right, so if Volkswagen can make progress here, would they be back at the top of the auto industry?
Not quite. Sure, having access to such technology would be a game changer for the company with regards to the EV business. And having early access due to a strong cooperation would obviously be a huge advantage in a market where other brands have been outperforming VW. But of course, Volkswagen is not the only car maker active in the field. Actually, even just that one company, Blue Solutions, is also partnering with BMW, a direct competitor to Volkswagen. And others are in on the game as well. Toyota, the world's biggest automaker and currently ahead of Volkswagen, has targeted a 2025 production startup date for its solid-state batteries, but has also experienced delays and is now looking at production at scale in 27 or 28. However, they're also saying they had a technological breakthrough and are looking at a battery with a driving range of 750 miles and a charging time of only 10 minutes. Other than that, Honda and Nissan are working in solid state, and Chinese battery leader CATL is also in the game, likely ready to supply the likes of BYD once they're ready. So, as so often, new technology is bringing one company ahead for maybe a few months, but the competition is never far behind.
All right, what are investors looking at in today's markets?
Well, two things happened today that are quite interesting. We got a China GDP update. China's economy grew 5.2% in 2023, slightly more than the official target. But all in all, the country's post-COVID recovery was far shakier than many had expected. There's a deepening property crisis, mounting deflationary risks, and weak consumer demand, all contributing to a rather weak outlook for this year as well. We're also looking towards the World Economic Forum in Davos, where later today ECB President Christine Lagarde will be speaking. And that will be interesting because everyone's waiting for clues on what the European Central Bank is thinking about the outlook for the bloc and what interest policy might look like in the near term.
All right, all eyes on interest rates for 2024. Thank you so much, Lars Holter, right there in Berlin. Thank you. All right, let's get a check of what's happening in Africa now. See, Ivory Coast is poised to issue its first Eurobond, making it the first country in sub-Saharan Africa to do so after a hiatus of nearly 2 years at this point. Let's talk to Patrick Bankwa, Global Investment Consultant. Great to have you on the show.
Thank you for having me on your show once again.
So if I remember correctly, most top economies in Africa, they have stayed away from the Eurobond market because interest rates, went really high, so they couldn't afford these rates, But now we're seeing a country like Ivory Coast, heading in that direction. What are you seeing here?
Okay, so I think what I see from the move by Ivory Coast, I will look at it from the challenges and opportunities that they face. So in terms of the challenges, as rightly said, looking at the interest rates that they are going to possibly incur. Currently, they have about 15-year Eurobond, which has a yield of about 7.9%, which is high compared to other sovereign users along the line. So that's a challenge that they need to overcome on this market again. Then the issue of currency risks. Eurobonds are, as you already know, are dominated in euros and foreign currencies, which exposes Ivory Coast to fluctuation in terms of the currency. And if there's depreciation of the CFA against these currencies that they are going to be incurring on the Eurobond market, it will become a bit difficult for them to repay their loan because now the loan becomes a bit expensive. Again, look at the fiscal discipline, which is also a challenge of the going to the Eurobond market again, because if the country does not maintain proper fiscal discipline to be able to manage its debt, then repayment becomes a bit of a difficulty. But that's a challenge. Of course, while there's a challenge, there's the positive side, which I think we should look out for, and it can help Ivory Coast in this regard. The first has to do with its strong economy. Ivory Coast boasts of one of the continent's most stable economies and is even projected to have grown by about 6.5% in 2023. This is a strong economic performance which will help them to generate enough revenue to be able to service their debts. Again, look at issues relating to their overall credit rating. Ivory Coast credit rating was upgraded by S&P in 2022, which shows that there's improved governance and fiscal management in the country. The last thing that also offers Ivory Coast an opportunity with this new Eurobond market has to do with the diversification of investment. I mean, Eurobond gives Ivory Coast an opportunity to have diversified investment of funding sources, and it reduces the dependence on local domestic financing, thereby freeing some resources that other businesses will be able to access by way of if the government is fighting local businesses for the little funds that businesses need to be able to expand. So the challenges and opportunities, I think, is there for Ivory Coast to be able to overcome. What they need to do is ensure that there's a right balance between the challenges that I've mentioned and also the opportunity that they can intensify to be able to go into the Eurobond market that's indicated.
Talking about opportunities at this time, there's a lot of chatter about rate cuts in 2024, for countries like the U.S. and major economies, at this time. Do you think that's a signal that it could be time to head back to the Eurobond market for 2024?
Yeah, I think countries can look at that to pursue the possibility of going back to the Eurobond market. But most of these economies that we are talking about are now recovering from the challenges from COVID, the Russian war. That takes a bit of time before they can up their game or go back and get the revenue to be able to meet the demands of the Eurobond market. So it may be too early to say that, most African economies should go into the Eurobond market because Ivory Coast has paved the way. Countries should begin to look at their revenue lines to be able to see whether depreciation of their currency will be able to meet the demand that comes to the Eurobond market, and also the interest rate that they will be getting as compared to developed countries like the US, UK, and other countries in Europe. So I think it's a nice situation. It's not a bell that has been rung for every country to go. You have to look at your projections, your revenue lines as a country before you take the decision to go into the Eurobond.
Right. And still looking at the debt market at this time, we did get that news a few minutes ago. See, Ghana, they've won a moratorium with official creditors, on debt payments. That's through May 2026. What are you hearing about this? And that's good news for Ghana, I guess.
Yeah, it's good news for Ghana. When you look at it from the IMF bailout that government went for last year, and then that led to government going into the restructuring of debt. So the local debt restructuring ended somewhere September, and what was outstanding for IMF to look out and give Ghana another tranche of the bailout was the agreement with external creditors. So getting the news that there has been some kind of agreement or some kind of decision to have our debt restructured and payment to start in 2025, 2026, I think it's a good initiative and it's a good news for the country Ghana, because now Ghana will have the fiscal space to be able to engage in other economic activities. However, it is just a postponed repayment. It is not debt that has been forgiven, as we say in the local parlance, but it's a debt that you need to pay back in future. So if you don't put in the right mechanism to be able to get the revenue to pay them in 2026, then it becomes another cycle of going back to IMF, and the country will not be seen in the very good image when it comes to credit rating. So for now, it's a good step. It will help the country to boost its economy. We'll begin to see activities picking up again. We'll begin to see inflation dropping further. We'll begin to see a stabilized economy. But it's just a momentary step. Government should make sure we do not go back to the same situation where we could not pay loans that have gone from the external creditors.
What are you seeing for revenue and debt levels for Ghana in 2024 with this good news here, even though it's a postponement?
Yeah, I think in terms of revenue, it will give an indication of businesses that will be able to expand because things are dropping, the financial indicators are dropping. So as we speak, I don't know if you have heard about it, we ended 2023 with inflation of about 23%, as compared to 53% that we started the year 2023 with. This is an indication that things are beginning to take shape. And we are hearing that the central bank will be reducing the policy rate from the current 30% to maybe 22%. That's also another indication that businesses will begin to have loans at a lower rate as compared to what they already enjoy. So all of these things together should propel Ghana to the next level. And it's all about the government being able to be disciplined when it comes to their spending and also channeling their funds to the right sectors of the economy to be able to cause major economic growth in terms of our GDP.
Talking about, Ghana's inflation rate, dropping to the 20s level from 50s earlier, are you feeling that, when you go to the markets and, the supermarkets? Can you feel it?
I feel it in the point that, historically, Ghana always experienced prices of goods and services going up very high in between November and December of each year. If you look at the trend this year or last year, December, November, prices of goods and services did not rise as expected. So in that scope, you may say that we are beginning to see maybe the traction of the reduction little by little. But I expect it to go down further and for everybody to experience it over a period of time. Inflation impact takes a bit between 3 to 6 months for every aspect of the economy to experience it. And that's what I'm expecting, especially with the news like government being able to have agreement with the external creditors. We should begin to see its impact. And I also believe that government has a role to engage in some of these critical economic areas who sometimes drive inflation in the country. And when you listen to the last Statistical Service report, food inflation is quite high again. So what can the government do to be able to enhance that? I think that it falls squarely in the Ministry of Food and Agriculture. They have to take steps to ensure that if food inflation does not rise, then people begin to feel that in their pocket. At the moment, in the scale of 1 to 10, I can say that we are maybe feeling between 2 to 3%, 2 to 3 over 10 in terms of the impact of the inflation that has been dropped.
Right, yeah.
Over the last 6 months.
Definitely, food inflation needs to be tamed, at this point, because that seems to be driving, headline inflation in most economies in Africa. But thank you so much for coming on. That's Patrick Ba Abankwa, Global Investment Analyst there. Thank you so much for coming on.
Thank you for having me once again on your show.
Yeah. All right, let's take a look at what's happening in the crypto market now. We're still seeing, it's still quiet, in the market, I must say at this time. But let's look at the color. You see it's a green now, even though we see Bitcoin did get to that 46,000 level. But post-ETF approval. We've seen some pullbacks at this point, some profit taking, and Ethereum's also, but Ethereum's in the red. When we took this numbers earlier there, Solana losing that $100 level, and we see AVAX in the green, and mostly green is the color right now on the screen. Let's look at the top headlines. Right now, we see crypto. There's also a crypto panel at Davos there, and they're talking about how the market, what's going to drive the crypto industry at this point. It's another event there at Davos. It's called World Crypto Forum, and they've been talking about what's going to drive, the crypto industry in 2024. And they say it's not going to be greed, at this point. It's going to be use case. All the use cases for most of these cryptocurrencies are going to have to come out and play in 2024. We also see Ripple, they're delaying their IPO plans at this time. Regulatory issues, they still have that battle with the SEC, the U.S. Securities and Exchange Commission, so they're having to delay that IPO. They did plan it to launch it in sometime in 2024, but now they're putting that on hold for now. Then we see Bitcoin ETFs, they've topped 3x daily volume. That's compared to 500 ETFs that were released in 2023. The volume so far since the Bitcoin spot ETF got approved, that has gone up about 3 times. Let's bring in Samuel Oladipo now, founder, Nirvana Academy Web3 tutors. Great to have you on the show, Samuel.
Hi, Ladi. What's good?
Fantastic. So, we just see that news. Bitcoin ETF, about $10 billion in volume in the first 3 days of trading. That surpassed about 500 ETFs launched in 2023. That's really big. How come we're not seeing the impact on the price of Bitcoin?
Thank you, Ladi. I think in the past 3 days, Bitcoin has had about $9.4 billion in volume. It's actually like staggering. It's huge. It's very huge. But the last time I was here and we talked about these ETFs, I was comparing it to gold. When gold ETFs was approved, it took gold about 6 months before we started having a rally. And then when gold rally started, it went, just up only for about 6 months. Post ETF for Bitcoin, we had Bitcoin at, pre-ETF, we had people speculating about the price, and then price was shooting up from 30K. We broke 35 to 40 to 46, and post ETF, it just tanked. And a lot of people actually think this is not bullish. For gold, we did not have any movement for about 6 months, and for like 4 years after 6 months, it started moving. For me, I believe that this is the exact same pattern that Bitcoin is going to move with. With the kind of volume we are seeing, Bitcoin is literally the volume we have on Bitcoin alone is more than hundreds of ETF put together in this year. So with the kind of volume we are seeing, and if Bitcoin is actually going to follow gold's pattern, we are going to be playing the long-term game here, and Bitcoin is actually going to go. But it's only the patient people that would actually benefit from this.
And talking about, gold and the gold ETF, we know the supply of gold is unlimited, at this point. But Bitcoin, I believe there's only going to be about 21 million Bitcoins
million.
Ever.
Yes.
Ever.
Yes.
So looking at that, at some point, it'll be hard to actually get Bitcoin, when most of these Bitcoins are mined. So how do you think this is going to impact, the ETF, the Bitcoin spot ETF?
I don't think we are going to have any. Even if Bitcoin stops being mined, it doesn't mean that people wouldn't be able to buy Bitcoin. Bitcoin will just stop being mined. And if we're actually going to, bring in demand and supply, there are only going to be 21 million Bitcoin. For gold, supply is infinite. So factoring in demand and supply, eventually we are going to have a supply shock. We have heavy institutions raking in and buying Bitcoin. The top institutions of the world, BlackRock, Michael Saylor, just constantly buying Bitcoin every day. And if we're going to look at, demand and supply, factoring in that, I don't want to be so hyped, but Bitcoin is going to easily break $75,000 in the long run, I can't give a time frame. Bitcoin will easily break $100,000. For people like Michael Saylor, they are playing the long-term game here. And if you're an investor, I think the best time to actually get into Bitcoin is actually now, left to me.
Definitely not financial advice, definitely, because we know how volatile this market is, most of these markets, and always trying to find that right entry and right exit. That can be a problem for investors. Well, thank you so much for coming. It was great having your perspective. Samuel Oladoku, founder of Nirvana Academy, Web3 tutors. Thank you.
Thank you.
All right, so that's how the markets are looking today. The global markets, and right here in the NGX hit a new high, and Bitcoin, we're still seeing Bitcoin stalling at this time. Thank you for watching. And don't forget to visit www.channeltv.com for more updates. I'm Ladi Williams from me and the team right here at Lagos HQ. It's bye for now.